Well, good afternoon, everyone. Hey, it is Shooter Scott Henderson. Of course, at the end of our presentation, please do review those disclosures. We have a lot to cover. Doing a quick recap here. All right, we're looking at the VIX, VXX. We popped today. Above 47.03. If you believe this market is going south, you want to hold position size on. Targeting 55, 60 to $70 over time. I mapped that out in chat for you. Now's the time, folks. To the NASDAQ. We're at the precipitous right now. It's not broken yet, but it's right there. Now, one thing Sentinel has gotten me to do is focus a lot more on volume and where the volume shelves are, specifically with the blocks and splits. And that really is measured by unbalanced volume. In other words, where the orders are sitting. However, we've gone one leg further and looking at where the demand zones are on the daily basis, which is what we're looking at now, and then the demand zones on a weekly basis. So we have this ledge here. Really, nothing has gone wrong until that ledge breaks. So all hell doesn't break loose until we close below 423.45. At that point, we're looking at the Great Recession kind of a crash. I don't know if that's going to happen yet. Charts aren't telling me it is, but I can see the occurrence. I can see exactly where it is. So for the moment, I think our next target is about 483 on the NASDAQ to really 448. So there's a huge range here. And it's basically another ledge, falls off it. It's going down here. Ledge here, right at our 476. Ledge here at 448. Ledge here at 442. One thing that I have a problem with this NASDAQ chart or the QQQs in TradingView is this wave 5 is not accurate. So let me come out to the weekly and explain what I mean. This is wave 2. This is what it's measuring as wave 4. So the reality is this is probably wave 3, the end of wave. And the reason being, how long is wave 1? Now, currently, according to this, it is measuring this as our wave 1. Excuse me, this as our wave. However, we broke below the wave structure. So it really starts here. So equality is that so if our wave 1 is this long, wave 3 is not that long. So wave 3 probably comes up even further. Wave 5 actually pushes up towards 650 or 700. However, from an equality standpoint point of view, no matter how you measure the beginning of wave 1, this is wave 2, that breadth. Typically, always, wave 4 is at least 50% of the breadth of wave 2. Almost always, at least. And it's closer to 75%. So as I'm thinking in my little boxes about what do Elliott wave patterns like to do, I'm thinking this is our 3 here. Maybe we do hold, push a little bit higher, get up towards this resistance band again, right? Maybe around 580. That is our primary wave 3. That rejects for 50% of the whole leg. So 50% would bring us back to maybe 395 from this high, right? That makes sense. This it aligns with this shelf. On top of that, from a visual, what I see this as our main demand zone. Even though it's not being measured by the tools that I have here, that's the demand zone that I see between 384 and 413. That's my 2 cents. All right. All hell does not break loose until we close below 483. Then Armageddon happens. We break below 423 because that opens up this whole shelf here and potentially opens this up because that probably won't hold. If that's the case, they are right, except for this is our 5. This is a ending diagonal. Shallow 2, broad 4, right? Ended here, and it's going to roll completely over. And then we have the structural reality that this is going to be very tight and fast, and it could measure, bringing in our fibs, really challenging to measure this large of a structure. Part of the reasons is there's no place to measure. So from the entire structure, 50% back is right here. Second golden box is 363. The third golden box is 243. So our most likely outcome of that kind of a retrace is a 275 QQQ. If this is it, if this is a ending diagonal, etc. I'm eating some indulgent trail mix, peanuts and raisins and I don't know, chocolate thingies that are good. Peanut butter chocolate thingies. Okay, so we really don't get in trouble here at all until we break below 483. Outside of that, even though we structurally, we have a sell here. We are in a sell. We have broken below. Okay, mainly a breakout below this breakout at that 503.74. All right, so this is really the golden box we're probably going to land. I think that 483.75 holds. I think we have too many dip buyers. So, but markets could get spooked quite a little bit. Right. Also notice that even though we have selling, it's just we don't have buyers. Notice the breadth of the sell over here. Look at how much more. I mean, we're talking an average, just looking up there, of roughly 18 million. And in this range, we're down between 14.9 and 14.99 as far as volume today. So we have another 4 million in sell volume we need for this to happen, right? Which really is not that much on the grand scheme of things. So no need to get concerned, but I do like QQQ puts as insurance here. 450s, right? June. All right, let's look at, that's insurance. That's not a trade. There's a difference. All right, looking at the SPY on the 4-hour, back to the NASDAQ real quick. Note 4-hour RSI is at confirmation now for a low to the uptrend. So that means we get at least one more divergent lower low. Back to the spot. Note, we have not confirmed, right? But it sure looks like we're going to. Looks like we might even take out this RSI over here. Back to the full-size structure. The S&P already did break down. This was our breakdown, which occurred at 590.49. Next target is 575. Below that, 568. Then we have our weekly confluence zones. Let me talk about this for a second, okay? One thing that Sentinel has gotten me to do is we are looking at time frame boxes, very aggressive. For example, RSI, it's gotten me using a 5 and an 8 period on intraday, and we're using an 8-14 on a swing, right? Then a 14-21 on position trade. And we're drilling down even further than that on these bands. So this on volume measures the monthly numbers. That's where the number is for the monthly, right? This supply and demand tool zones, we've got this targeted to measure the daily, right? What we're doing is we're now looking for the confluence between daily, weekly, and monthly. So now we bring in the monthly, the weekly confluence. So this is our heaviest demand zone to the downside. So I don't think that breaks. I'm just looking at where we are on the chart. The next major demand zone is way down here at 400. So this breaks, though we have a lot of support, and I see this bar as our demand zone. Technically, from multiple time frames, there's not much until we get back to 400. So if we do get a sell, it's going to be there. But this is huge support. Huge, huge. We need a major catalyst. We need to panic everybody for that to occur. That's just my 2 cents. All right, drilling down again. First target now really is gap fill, which we got, right? The next target is at 575.47. This next month's 575 puts are very viable right here. IWM just gave it up. Small caps are in serious trouble across the board. Major daily, weekly, monthly demand is blown out. That means the next area is on deck. So we're talking 200, which really isn't that far before we could find some support here. Target 1 is 204. Target 2 is the base of that at 196. The on-balance volume monthly is way down here at 173. Notice this pattern, flat. So our mound is here. This seems a little fast for the mound for me when I'm structurally looking at that. One big problem I have with RSI here is this is a confirmed low. It took out this confirmed low, diversion low. So this was a in-trend diversion low. This is a low of lows, but we didn't get a divergence. So what does that mean? Well, notice where this trend support line is, comes down here, all the way the heck over here. So quite often, the most likely spot, if we're going to break down totally in the Russell, is $80, way to the downside. The Armageddon trade is $80, January 2027 put, but I wouldn't go big at all. It would be like more versus $500, $1,000 maybe. That's a 1 to 3% outlier event. But if it happens and you own some of those, they're going to pay you 10,000%. Back to the 4-hour. So here's our immediate low. Very bottom. This is the week's sister. We now are heading towards 204. It's only $8, but it's a pretty solid trade next 3 to 6 weeks. Let's jump over and look at the Dow. Now, theoretically, we should see some flight to safety in some Dow names. We're not seeing that right. First target is 431, but this structure tells me we're going down to 416. Next divergent 160.18 is down at 397, which would be way the heck down here at 400. At this point, the 4 names that we reviewed, I like the Russells for the short, Qs to follow because I think it has more to come off. The reason I like the Qs is for the same reason. Look to my right here. Look at Apple. Where's Apple going? Look at those fib extensions off of the pattern. 209 to 184. Meta, 627 to 528. Netflix, essentially done, but I don't think it's done. I think that's a 5. One thing about this strategy, and it is Elliott wave absolute. Okay, I don't think it's measuring the wave. It's just my 2 cents. So this is 1. This should be 3, right to the 78.6, right? Back test of at least 138 should be a good number. Then it continues down. Something like that. That's the 5-way line here, the impulse line, based on that. However, structurally, from a mound standpoint, we should honor this trend support. So we should honor 907. So that's your sign. I am hungry. So alert to the downside for Armageddon continuation is below 908. Tesla is the weakest sister. Let's go back to the weekly. And I cannot tell you why I wasn't sure. I just wasn't looking at it. We're accelerating. Tesla, target 1. There's no other target. 214, $70 lower from where we are. Next target is 182. However, this trend support, that's the only thing about auto strategies is you can't click on them and you can't add some. So when I want to set an alert, that's something I have to overcome. So coordinates, okay, price, second coordinate is 265.99. So we break below 265.99. That opens up trend support down at 170. You're short. It breaks below it. It's not going to overshoot. I mean, it could overshoot. Drive 1, drive 2, drive 3. Most likely is you get back to about 50% of this rise from here, the 102 to 134. So that's $32. So 266.39 down to roughly, let's just say 230 is about guaranteed from where we are. So pretty much that downside is $50 from where we are. So far, the Russells and the Tesla are your two major shorts for continuation. Talk about Nvidia here. Target 1 is in play. 113. Pretty solid trade, 3 to 6 weeks out. Huge gap to the next target, 100, so $13 lower. And it'll be quick if they're going to give it up. First demand zone, which really is weak. Reason being, notice our wick here. There is no breath, right? There's none. That is a very weak demand zone. I just did that to put the label. It's a line. Basically, it's that thin. It's thin, which means unless the market turns, $66 is viable for Nvidia, which is huge. Now, let's chat about earnings a second. Earnings were good, but guess what? It wasn't good enough. Now, think about that real quick. PLTR, were earnings good enough? Right now, risk is a downside. Measures this shelf at $45. Really tough for me to hold this. Really tough. Google, definitely. Covered calls. Microsoft, covered calls. We're heading down towards this 372. MP Materials showing some relative strength. Closes below 1891. I would be trimming my position because then this is going to roll over. And then look at buying it back around $16 or $17. That's what my thought. Well, that's what I've got for today, folks. Great trading. Until next time.